Hi everyone, this is Christine from Take Financial Coaching, where I coach people to financial freedom. So for today's topic, I wanted to talk about the 5 different filing status of your tax return. And the reason why I picked this topic is because I've had clients or friends who always ask me about the filing status, and included in my services is to actually review all my clients' tax returns. So what I find out is that sometimes they will make mistake on which filing status that that's are best for them. So usually, like one of my clients, she filed herself as single, where she was actually qualified for a head of household, and she didn't know that she was qualified, and she did it in TurboTax. So she wasn't really, I guess TurboTax didn't ask her the right question. So I asked her to actually amend her tax return, so she was able to get $1,000 back. So I want to make sure I just want to give you a general guidelines about your 5 filing status, and then hopefully this will help you. And as usual, tax can be very complicated. So if you have any questions, like I'd advise you to actually go to a professional tax preparer. Okay, so let's get started. Oh, hi Megan. So let's get started. So this one, so basically there's 5 filing status, okay? So there's single, head of household, qualifying widower with dependent child, married filing jointly, or married filing separately. So you can see the numbers here next to it is the standard deduction. So I'm basing off of, oh, actually, sorry, let me just share my screen, I think, so you can at least see. So, so there's 5 filing status. So qualifying widower, married filing jointly, married filing separately. So this this numbers next to it is the standard deduction. So I'm just basing of the 2018 tax return. So it will go up slightly, but I'm just gonna base the numbers from 2018 right now. So because it's only gonna be up only by a few hundred or so. So first of all, you have to ask yourself, are you married or not married by the end of the tax year? So if you're married as of the end of the tax year, so let's say you got married on December 30th or December 31st, you are considered married for the entire year. So if you're married, you have 2 choices, okay? So if you're married, you only have 2 choices. So you can file married filing jointly or married filing separately, okay? So ideally, so I do have friends who are married, and then they always come to me and ask me, should I do married filing jointly or separate? Should I do a separate returns from my spouse? So I always tell them it's advisable to do married filing jointly instead of separately, because usually when you do married filing separately, you lose out on the credits and deductions, and I'll go over that in a little bit, but some of them are here, but then there's a lot more that you lose out on. But usually, so if you usually you want to do married filing jointly, so you get the 24,000, and then but usually you want to do married filing separately. The main reason is usually because you want to separate your tax liability from your spouse, because signing a joint return makes you both responsible for the accuracy and completeness of the tax return and obligates you for any current or future tax liability. So if you file separately, it will make you only responsible for the accuracy and payment of your own taxes. So if you suspect your spouse is omitting income or overstating deductions or credits, sometimes married people, they're not aware of, they don't always talk about their finances all the time. So if you do suspect that, definitely you have to do married filing separately. Then at least you are only responsible for your own liability. Okay, and then the IRS won't come after you. There's like a $10,000 tax liability, then the IRS won't come to you if you do a married filing separately. Okay, so so married filing separately and jointly is just really for tax purposes. It doesn't say anything about if you're separated or not. Okay, this is just for tax return purposes. Okay, so now let's say you are not married, then you all have only 3 choices, right? Single, head of household, or qualifying widower with dependent child. So I'll go from bottom to top. So I already talked about the married. So if you're not married, let's say qualifying widower is that if your spouse pass away at any point in time during the tax year, you do qualifying. No, actually, you for that year your spouse pass away, you want to do married filing jointly. You can do actually married filing jointly or separately for the year your spouse died, because you're still considered married for that year. So you choose that, and I went over the difference already. Then the 2 years after your spouse passed away, the 2 tax years, then you want to do qualifying widower only if you have a dependent child, of course. So because you get the $24,000 deduction, which is higher than if you do single or head of household. So you want to utilize this if you have a dependent child. So what's a dependent child? Dependent child is qualifying child which is under age of 19 or under 24 by the end of the tax year if he or she is a full-time student. Okay, so to be qualified for qualifying widower, you must not remarry by the end of the tax year. So if you remarried, then you have to do a married filing jointly or married filing separately with your new spouse. So, and you have to pay for more than half of the cost of keeping up your home for the tax year. Okay, and the child has to live with you all year. Okay, unless they're going to school, so perhaps they might be in a boarding school, whatever, but that's a one-off. Okay, so now if the person if you're not qualifying widower, you don't have a spouse who passed away, then there's a single or head of household. So the more beneficial, of course, is the head of household. Yeah, Megan says, I wish I could claim my dog. Yeah, I wish so too, but then we can be a head of household as well, right? They are dependent. So anyway, unfortunately not. So head of household is $18,000. It's better than single. So how to claim? So basically you have to be unmarried or consider unmarried on the last day of the month. So you can technically be legally married, but you can be considered unmarried. Yeah, I know it's confusing. So how can you be considered unmarried? You have to file a separate return. So married file, your husband or spouse will be filing their own return. So your spouse did not, yeah, this is very important. Your spouse did not live with you during the last 6 months of the tax year. Okay, so then you can be considered unmarried. Okay, so because like the reason your spouse can do married filing separately, so they do the 12,000. But if you have if you can claim you know a child under you, and then you know the spouse doesn't live with you, so you still want to claim a head of household 18,000 because you're gonna get a higher standard deduction than doing a married filing separately, right? Because your husband doesn't live with you, you file a separate return, so you want to have a better higher standard deduction than your spouse who's you know doesn't live with you anymore. So then here oh yes, for head of household, so this is important, you have to pay for more than half the household expenses too. Okay, so for keeping up the home, mortgage, bills, whatever, so your child can't be the one working and paying for more of the household expenses. It has to be you. So IRS is very strict on that. They will ask you for support on how did you pay for more than half of the household expenses. Okay, and of course the most important thing, you can't just be head of household unless you have a dependent. So that can be a qualifying child, QC, or qualifying dependent, which can be a qualifying relative. So qualifying child should be again under the age of 19 by the end of the tax year, or under the age of 24 if the child is a full-time student. Or if they're not a qualifying child, you can still claim your qualifying relative. So this person has to be a relative. You cannot claim your boyfriend or girlfriend living with you. You cannot claim your housekeeper, your maid, your chauffeur, or whatever. They have to be a qualifying relative, okay? So the qualifying relative is a descendants, ancestors, or siblings, okay? And so they must live with you for more than half of the year, okay? Except for parents. Parents do not have to live with you. So I actually claim my mom, she lived in the Philippines, so I sent her money, but the money that I sent is also paying for more than half of her expenses as well. So I have to claim that I do support my mom. So for example, if your parents are in a home for the elderly, and then you do pay for most of the costs, then you can claim your parents because you are paying for almost everything, right? So let's say your parents' Social Security can't afford to pay for the entire retirement home. You are paying maybe 75% or maybe 80 or 90 or 100% of that. So you can claim your parents, either one parent or both parents, if they're in a retirement home, okay? So there are also qualifications to be able to claim your parents. So your parent has to be U.S. citizen, resident, or resident. So they, there's also multiple qualifications for that. Again, tax is complicated. You want to check with your tax professional to make sure that you are qualified for some of this. So now, so if you're not qualified for head of household, then your last option, I say that's the last option because it has the lowest standard deduction, $12,000. Although, if you notice your tax return from 2017 to 2018 tax return completely changed from 2017 because of the new Tax Cut and Jump Act, you know? So actually we got a higher standard deduction. Before I forget, it was like maybe 4,000. So now it jumped up to 12,000. So it's still fairly high compared to what it was before. But still, like if you had the choices between this 5 standard filing status, you do want to choose, you know, from the best to the least, right? So single, I think that's pretty simple. If you're not married, you don't qualify for qualifying widower for head of household, then you can claim single, which is $12,000. Okay. So I hope that was helpful and gave you some you know, knowledge more about the filing status. If you do have any question, feel free to comment, and then I'd appreciate if you like this video to like or share my video. So thank you very much. Bye-bye.